Hi, welcome back to our channel. It's been a while, right? Okay, I hope all of you are fine, all of you are healthy, right? Economy has opened up again, but we have some bad news along the way. But well, let's see what we have to share with you today. Okay, I'm going to talk as a slide to show here. I'm going to talk about S&P 500 index again. I'm going to talk about why the S&P 500 index is still a very safe instrument. It's still a very good instrument to trade, index to trade, to help you build up a steady source of second income. Okay, even though, officially on the 14th of June, S&P has entered in the bear market, but why is it still a good instrument to trade? Okay, allow me some time to share with you why it is so. But before we start off, why don't I share with you what S&P 500 is all about first? All right. Okay. Well, we trade the E-mini S&P 500. Okay, and it's actually traded on the Chicago Mercantile Exchange itself. Now, this is important. Okay, why it's traded in the exchange? The reason is that I want to trade in an environment which is transparent. Now, throughout the whole world, whoever is trading S&P 500 is trading through this exchange itself. So there is very little room or no room at all for manipulation. Right? The market makers don't come in to manipulate the market, etc. Okay. Why we call it E-mini S&P? It's actually tracking the standard S&P itself, right? The S&P, the index itself. But because for retail traders like yourself who wants to first come into trading, you might not have the capital, okay, to be trading the standard S&P contract. Okay, we should require easily at least 25,000 US dollars per contract. So what the exchange have done is that they have broken up a standard S&P contract into smaller bite-sized chunks. Okay, make it easier for retail traders like yourself, myself, whoever wants to start trading. So you don't have to pump in a huge sum of capital in order to trade. As its name implies, S&P tracks the 500 largest US public companies in the US. So these are companies like Berkshire Hathaway, Apple, Yahoo, the banks, etc. These are all big companies. So it gives a fairly broad base, okay, of the industries in US. No one industry can actually dominate in a particular sector. So it makes it easy. It makes the volume is there for us to trade the S&P. It makes it easy for us to get in and out of a trade. Okay, how do we then profit from trading the S&P? Every time the market moves up or down, we call it one tick. So every one tick move is equivalent to 0.25 points. Now, if you are trading one contract, okay, some of you might not be familiar. Some of you have traded shares before. Shares you trade like one lot, two lots, right? So that is the unit size. So in futures trading, okay, when we're trading index, it's the same idea, but they just use different terminology. They call it one contract, two contracts. So if you're trading one contract, and if the market move in your favor by one tick, a 0.25 point move, that will give you a profit of US $12.50. Now, let me just give you a graphic example of how the market moves, or how you can actually profit from the market. Okay, assuming that the index is trading at 4,000 points now. Okay, when you look at your chart, you found that there's an opportunity to take a long trade. A long trade means if the market is moving up, you buy low, and then when the market goes up to a higher price, you sell at a higher price, and you make the difference in between. There's another terminology called shorting the market. If the market is heading downwards, you first sell at a higher price, and when it goes down to a lower price, you buy back. So you sell high, buy low. Okay, your profit is the difference between your selling and your buying price. So back to this chart, assuming it's trading at 4,000 points and you saw an entry opportunity to take a long trade. So you went long with one contract, you went up, okay, 4 ticks. Eventually, when it hits 4001.0, okay, you decided to take profit. So you bought low, you sold high here, right? So the difference between your buying and your selling price is 1 point. Okay, and this 1 point will give you a gain of US $50 for every one contract that you are trading. So if you're trading 2 contracts here, this 1 point move will actually yield you US $100. Right. Well, earlier I mentioned that the S&P has officially entered a bear market. Well, basically the whole sentiment is not just S&P, all indices in the world. As you know, you guys must be aware because of the war in Ukraine and Russia. Okay, inflation has set in, prices have gone up, right? And economy is not doing that well because of production, etc. So things, the market moves in such a way. Okay, you have ups, you have downs. Okay, currently it's in a correction mode. Okay, so it has entered in a bear market. So why do I say that S&P is still a viable index to trade? Okay, so some people have asked me, well, you've been trading S&P for so long, you must have seen the market go up and down. Is it really still viable to trade the S&P index in such a bear market? Well, my answer to them is there are actually plenty of opportunities. For those who are not new to our channel, okay, you realize that we are day traders, we are not swing traders, right? So for us, within 1 hour, within the 2 hours, there are always a lot of opportunities for us to either take a long trade or take a short trade. So even though the market, even though it's a bear market, we, in the back of our head, we are expecting that the market is going to come down. But in any given time frame, okay, any given a moment in the market, a day itself, the market simply doesn't go in a linear downward fashion. Okay, there will be upswings, there will be downswings, allowing us to take both long and short trades. Okay, let me show you an example of a chart. Okay, just happened occur a few days ago. Okay, this is on 27th of July. Okay, you can see that although it's a bear market, there were 6 entry opportunities for us within this 2-hour time frame. There were actually 3 opportunities to take short trades. Okay, but even though it was a bear market, the opportunities presented itself, okay, for us to even take long trades here. Okay, so there were opportunities. There always be opportunities to take long and short. Okay, then some of you who are new to trading might be asking, so how do I actually profit from a bear market? How do I sell? I don't have anything. What do I sell? Right? I struggled with this idea initially. Okay, when I first started trading back in the year 2003, I have nothing to sell. What do I sell? Okay, just bear in mind that we are trading the price difference, okay, between your selling price and your buying price, or buying price and selling price, whichever occurs first. So for example, these 2 entries here, okay, so what happens is that when we take a short trade or we sell first, we sell at a higher price here, right? So when market moves down to a lower price here, we buy back. Right. So how do we make profit then? We make the difference. We make a profit in the difference between our selling price and our buying price. So if our selling price, let's make it easy. If our selling price was 4,000 points and our buying back price is 3,998 points, okay, that's a 2 points difference, right? Okay, so you make a 2 points profit here. Remember, 2 points profit per contract that you are trading will be $100. If you are trading 2 contracts, these 2 points gives you $200. Okay, so that's how we actually profit from the market. Whether it's going up, like this case here, or whether it's going down, there are opportunities for us to profit in the market. Okay. So yeah, there are opportunities galore. All right. Just recently on Thursday night, just a few days ago, when we posted on our Facebook, our traders, our members were not surprised at all that it was an active market, and there were actually 10 entry opportunities for them to take trades. So whether it's a bear market, S or bull market, now S&P offers us plenty of trading opportunities. And I like to stress, okay, especially at this point, at this time of uncertainties, you guys must have heard of cryptocurrencies, Luna, etc. S&P is traded in a regulated and transparent environment with no manipulation of the market at all. So market makers do not have a chance. Market makers are the people behind the scene who are actively hunting for where you place your stops. Okay? In trading, stops are important to protect yourself. But these market makers, they are hunting for your stops to actually take you out. Okay, take you out. So for S&P, okay, because it's traded in a transparent market, in the exchange itself, okay, there is no room for these market makers to come in to actually hunt for your stops. So it's a safe environment to trade, and we've been trading S&P for so many years, okay, more than 10 years in fact, and it hasn't gotten us we haven't experienced any adverse effect from that. Okay, in fact, many of our members have enjoyed, okay, trading S&P, okay, and they have actually profited handsomely from it. Okay, so if you are interested in knowing more about concept of price, you can go to you can email us at info@conceptofprice.com, or you can even find us on our Facebook. Okay, just drop us a message and we'll be glad to reply to you. if you have any questions, if you have any suggestions on what videos you would like to see from us, do on a YouTube, do drop us a comment. Okay, make a comment. Give us a suggestion. We will try to accommodate as much as possible. All right. So I thank you for your time for listening to this video. Okay, and remember to click a like. Okay, and subscribe to our channel. So I hope to see you in the next video soon. Thank you.